Stay tuned, everyone. Welcome to this Forex Trading Hangout, your weekly Forex market review for 17th of May 2014. I'm your host, Jack Wong. Thank you for watching this weekly video. You may notice that the title to the video series has been changed. Used to be Saturday Fever. I've decided to register a new URL just to reflect the Hangout format properly. This is forextradinghangout.com. Okay, so let me go to my screen share mode, and I'm going to show you some of the key charts we have. So first of all, of course, you may want to actually pause the recording if you're watching this now, because you need to understand that what we are doing here is educational content. We are not giving you any form of investment advice. We are only showing you because there are a lot of charts that we are going through, but we are here not to give you what is the trade like, which is what is the entry price, what is the stop loss, what is the profit target. We don't do that here, okay, because of the regulatory reason. So next week, let's look at what are the major events. Now we have in our options trading hangout review talk about the FOMC minutes as well as the HSBC flash manufacturing PMI. Now if you are looking at the euro dollars, it's very important to take note that on Thursday afternoon there will be the German, French, and Eurozone manufacturing PMI. These are very important numbers that will affect the euro dollar's sentiment. Then on Friday, you also see that in the afternoon there will be German IFO business climate. Okay, so these are the movers for euro dollars. If you are looking at trading British pound, then on Tuesday afternoon, you will know that there will be inflation number coming out. The market expects 1.7, which is still below the BOE's mandate of 2%. So if the interest rate is still low, guess what will happen? Well, BOE is not in the urgency to raise interest rate. I explain why British pound is a bit weak right now. And then nothing major coming out from New Zealand. We have got one important announcement from Australia, that is the monetary policy meetings minute. But I personally do not think they will make a lot of impact on Aussie dollars, simply because RBA has been saying that there's no interest rate cut, and at the same time there's also no interest rate hike. It's a steady currency, so to speak. So if that's the case, who cares? Okay, so that's the announcement. So let's move on to the charts. I want to flash a few charts just in case you find interest. Number one, I want to talk about the euro dollar chart, because this is the chart that lots of people are talking about. We have seen that on the euro chart itself, we have a very nice long tail pin bar on Thursday session. So what it means is that depending on the price action on the following week, if you are bullish, well, you can consider going long. If you are bearish, then you need to wait for this level 1.368 to be broken, because the previous price action are telling us that this level is pretty much quite strong, okay? Even though you might think that fundamentally speaking, euro dollar is weak, knowing that ECB is provide additional stimulus in June. This is quite confirmed. There could still be something happen on euro dollar. Okay, so be careful out there. Okay, so I'm not here telling you must short euro dollar, but I just want you to understand that there's this very strong support level. Okay, so price action is telling us this. Okay, so just be careful out there. Now then we move on to the British pound. You see that we have nicely bounced off the 48.6% fib retracement, and then on Friday is heading back up. So if you were able to time this properly, so you will see that the pound dollar pair will have done you a very nice trade. If you are not sure what to do with this, then never mind. You can still wait for the retracement of pound dollar before you do any long trade. The reason why pound dollar is going up at this point in time is nothing to do with the British pound itself. It's because of the treasury yield in US that is dropping, resulting in a weakness in US dollars, and that's all. So this is because of the fractional disparity concept, pound is neutral, but dollar is weak. That causes the pound-dollar pair goes up. Okay, nothing much about the fundamental news of United Kingdom. Okay, so watch out with that. I will also then want to talk about the New Zealand dollars, because what happened is that for Kiwi, you see that Kiwi has been quite in a tight range. It's actually less than 100 pips for the whole week, if you like. But one thing that I know is that there was a long tail on Thursday session. Friday was a bit weak. If US dollars is going to be rebounded, coupled with the fact that the RBN set is now being expected not to raise interest rate in June, fundamentally it should go down. Technically speaking, it might also go down. So this is a pair that I'm watching out for a short possibility. Okay, and then I would like to talk about some of the currency crosses. First of all, I have not been talking about yen crosses for a while, simply because yen is still trading at this very tight range. And at the same time, notice that yen has been touching 101.3 on Thursday session and bounced off to the upside. Then I'm waiting for the dollar-yen pair to come down and break below 101.30, and then the next level will be 100.79. This is a very, very strong support area, so I have no reason really to trade yen crosses right now from a technical trading perspective. Okay, so let's move on to the yen crosses. I've actually talked about a potential breakout that happens last week. You can see that the pound yen cross actually went down very nicely, about 200 pips. This is what we call really patience make the pay for it. Okay, and euro yen, you also see that euro yen, the triangular formation was broken, nicely put. The yen cross actually dropped. This yen cross actually dropped nicely about 100 pips. Okay, so these are the patients. Meanwhile, I have no trade on these two. And then I would like to point out for EuroCAD. EuroCAD actually has a very interesting sell because it is now in a very nice downtrend. Okay, so if you have missed the boat already, what can you do? You want to wait for EuroCAD to go back to 1.5 before you sell. The first day is a long tail pin bar. Okay, so that may signal that EuroCAD may go up. But since the EuroCAD has been making all these lower highs, the near-term trend for EuroCAD should be down. Fundamentally speaking, euro is weak, CAD is neutral. So fundamentally, it also speaks of the fact that this cross should go down. Okay, so the last one that I talk about is Aussie Swissy. Aussie Swissy, you will see that Aussie Swissy has a very nice bounce off to 8300 or 83 handle, and then it's now moving back to the upside. I actually featured this trade last week, if I remember correctly. So if you didn't get it, well, what I can only say is that you have to really, really wait for the cross to test 83 handle again to the upside. Swissy, by the way, is quite weak at this point. So if you have no yen crosses to do, you want to find other crosses, perhaps Swissy is a consideration. Okay, so now what I've got is I also have pound CAD. Now, if you are bullish in euro CAD, then you should also be bullish in pound CAD. If you are bearish in euro CAD, are you going to be bullish in pound CAD? So let's see. Because for pound CAD, we have actually a support, coupled with the fact that this is a very nice long tail pin bar. So I'm watching for this price action to come down about 50% retracement before I go long. It's just a very small trade because at the end of the day, the price action has been quite sideways. So there's actually no reason to go long in a trend mode. I'm just waiting for the price action to show a bounce. Perhaps I just grab a few pips that will just go away. Okay, so the last one that I would like to talk about is Euro Aussie, because Euro Aussie surprisingly has been testing the 1.466. So again, it's not too late to take advantage of this cross, because you can see that the last few trading days it actually touched 1.466. So I'm looking at a potential short again, and I'm looking at essentially 200 to 300 pips move. There's a high, lower high, so downtrend. Possibly that may work. Finally, we have the Aussie Kiwi. Aussie Kiwi is on the verge of going to test the 1.09. Unfortunately, from Wednesday onwards, Kiwi was stronger than Aussie, so there was a little bit retracement, but never mind. Meanwhile, I'm still waiting for the cross to test 1.09. Possibly there could be a break to the upside. So watching this very, very patiently. Okay, so that's all I have for the charts this week. And coming back to the slides, you'll see that I keep talking about fundamentals. Why do we care fundamentals? Because fundamentals actually will change the technical outlook of the chart in seconds. So it is in your interest to understand and know how to apply fundamentals to trade forex market. That's the reason why I've got the weekly forex tactics review, a weekly paid subscription service, which is highly affordable, by the way. If you are interested, just send me an email. I'll be happy to share with you the crazy price that you cannot resist from subscribing. So you just one email away, folks. Okay, so that's all for this week. If you have any questions, comments, observations, kindly send me an email. Also check out my websites. And of course, very importantly, my online tradingforprofits.com, which is the free membership site. There we have about hundreds of members whom you can share or talk or exchange forex trading ideas. Okay, so that is all for this week, folks. I appreciate the fact that you come to here and watch all the way to the end. And once again, thank you for supporting forextradinghangout.com. I look forward to serving you more, my friends. Thank you very much. I'll see you next week, guys. This is Jack Wong. I'm signing off now. Cheers.